This is the stage 2 of the US financial meltdown. First Republic Bank is no more. As of May 1st, First Republic Bank is taken over by JP Morgan. First Republic Bank started going down 1 month ago after the collapse of Silicon Valley Bank. Back then, a coalition of big banks chipped in $30 billion to save the bank. It didn't. That money bought them time. 1 month, 30 billion, well wasted. And the stock price fell from 147 down to 350. According to the deal, JP Morgan takes deposits and most of the bank's assets. They don't take corporate debt or preferred stocks. Translation: JP Morgan takes profits and dumps losses on the US government. And this latest bankruptcy reminds us that the US financial meltdown is only getting started. My name is Vitaly. I am an economist. I'm a boring mainstream economist. And in this video you will learn a few lessons from the ongoing US financial meltdown. First, don't trust financial statements. All failed banks had beautiful financial statements until the very last moment, until the moment they collapsed. And the reason is the US accounting is created in such a way that it allows banks to hide losses. Because after the financial meltdown of 2008, the United States changed its accounting. So now banks put their assets into these categories: available for sale, held to maturity, held for trading. And when securities lose value, when a bank is suffering losses, this bank can just switch these categories however it likes. Such a bank can now hide losses. It can mislead the public, and it's all legal. Second, don't trust rating agencies. Do you remember how in the early 2000s rating agencies were committing fraud? They were giving toxic securities high ratings. They were telling us that the failing banks are reliable. Nothing has changed. Just like in 2000s, today rating agencies give high ratings to failing banks. Signature Bank won many banking awards, and Silicon Valley Bank was named one of the best banks in America. 5 days later, the best bank failed. So if your bank has high ratings and lots of banking awards, good for you. It doesn't mean anything. Your bank can go down within 24 hours, just like Silicon Valley Bank did. Next, don't trust politicians. When a politician goes on TV and tells you that this bank is reliable, that the financial system is safe, it's already too late.
That the banking system is safe.
Next, don't trust the Fed. Don't trust the US Federal Reserve. The US Federal Reserve has two tasks: to keep inflation low and to keep banking safe. And the US Federal Reserve is failing on both fronts. Inflation is high and banks are falling like dominoes. Finally, don't trust the US economy. If a failure of a few mid-sized local banks put the whole system on the verge of a collapse, if the US economy can't handle a minor setback, how is it going to handle a major event, the upcoming recession? In the end, the US economy will survive. Of course, it's a strong economy, but in the meantime, it will go through a few painful months or even years. Expect more bankruptcies. So if you want to stay tuned to the updates on the ongoing financial Armageddon, subscribe and I'll talk to you next time.